Well, Papua New Guinea is cutting spending and raising taxes in a bid to withstand a lingering downturn in its economy. The government's budget shows revenue falling by 2% and has forecast a spending cut of 3.5% to compensate and stop its growing deficit. The government has also said the major spending cuts were to capital investment, which has shrunk by 21% in the 2017 budget. Treasurer Patrick Crouch says the government had to revise its expectations because of the weak global economic outlook and also a fall in revenue. We're joined now for further details on this budget from our Canberra studio by Paul Flanagan. He's a former advisor to the PNG Treasury Department. Lovely to talk to you, Paul. You've described this budget as fiscally fraudulent. Why?
Yeah, it was a pretty hard call. There are several reasons for that. The numbers that are there on the revenue side have got some assumptions in them which just are not realistic. They're certainly not the numbers we'd be able to put in on the Australian Treasury side to assume an extra 1 kina to the ATO would immediately produce 25 kina extra in revenue. Those numbers just aren't realistic. And when you look also through some of the expenditure cuts that are foreshadowed in the out years, some of those just aren't realistic in areas such as interest expenses.
So one of the big areas that the PNG government sort of gambled on to a degree was borrowing heavily against what they were hoping to get oil revenues from the LNG project. This has really fallen short and been a really bad gamble for them.
It's been a really bad gamble. So if oil prices had stayed high from 2015 onwards, that gamble may well have paid off. But certainly with the collapse in commodity prices, they are really in a severe fiscal crisis. So this is a country of 8 million people, 2.5 million live in absolute poverty, 10 kilometres from our doorstep, which is starting to really face a cash crisis because they can't generate the money anymore domestically through tax revenue. They can't borrow the money domestically. So this budget is primarily reaching out and hoping that the international community will lend them funds through a sovereign bond or some similar instrument.
There's been, heavy cuts that you've extrapolated from what you could in the budget to really key areas like healthcare, education. This is almost the economy in crisis.
It is, I think, very much in crisis, unfortunately. So let's say, for example, the cut in health. The government talks, and I think almost fraudulently on this policy side too, it says it's protecting areas such as free health policy. That's a policy which is worth 20 million kina that's protected. But at the same time, they have cut in this budget relative to last budget 315 million kina out of the budget. From the period 2015 to 2021, there is planned cuts of 1 billion kina in the area of health, similar cuts to education, etc. So to say that they are doing well and protecting things such as free health, that's only 2% of the 1 billion kina in cuts they're making to the health policy sector.
And Paul, would you characterise this as budgetary mismanagement, or is it just very difficult times for them because of the downturn in commodity prices?
It's a combination of things. They took a very big gamble. It's just bad luck that commodity prices fell. But there's been a range of mismanagement in not responding to it quickly enough. There are some good tax measures in this budget, but if you look at the fall in overall tax revenues, they need to do much more on the tax side. Too much is happening on the expenditure side. It's not credible enough for the financing side. And ultimately what they need to do is to build up the resilience of the economy. You get that budget back into balance through time, through improving growth. And the policies aren't being put in place to improve growth.
And that's what I was going to ask you. Is there the expertise to do that, the ability to put those policies in place? As you point out, the likelihood of those revenue raisings is just not going to happen.
Well, you need to base those on a resumption of growth. Figures of 2% in real terms, that's falling per capita sort of growth rates in a country that is already got way too many people in poverty. So it's primarily to deal with sort of the poverty and the issues of well-being in the people of PNG, but with those policies it'll also come through budget repair.
There also is quite a large amount budgeted, for an election coming up and also for the hosting of APEC in 2018. Are these, obviously the election is there, but should they be thinking of hosting a big event like this which it can ill afford?
Well, they seem to be sort of big men sort of projects. They seem a long way from the cuts we're seeing in areas such as rural health centres. Yes, the expectation, the cost of APEC hasn't been transparent, but it looks as if it'll run, certainly this figure says 250 million this year alone in preparations for APEC. IMF put the figure closer to 3 billion. So these, if you're making a choice between do you run these big projects or do you look after your people through health and education, these seem to be some pretty unusual choices to me.
And do you think, Paul, that they will get the sort of external help that they might need from the look of this budget?
I think international investors will look through the numbers that I mentioned. It's not credible. It's verging on fraud, I think, the way they put some of the numbers together. There are smart people who look through those numbers. So I think there's a big cash crisis coming. I think they'll struggle through to the election. I don't think they'll reach out to countries such as Australia or the IMF, as they should certainly be doing by now, because they don't want to take the policy prescriptions to actually make the adjustments they need to.
Paul, thank you very much for your analysis.
Thank you.